Hey guys, good morning from Bali. Haven't done a video for a while, but look, I want to cover the topic of should you be an entrepreneur, should you be a stock trader, or should you invest or trade in crypto? And I know you guys can't see me, but you got this beautiful background in Bali. You guys don't need to see me anyway. So look, a lot of people freak out, and I haven't talked about crypto. I wanted to keep this mostly a stock trading channel because that's what I'm into. And I think that there's a lot of, there is a lot of scams in crypto, and there's a lot of basically hype. It's a lot of sentiment. There's not actually a lot of good projects, or we don't know which projects are going to win. You don't have the information that you have when trading stocks. But, some people worry about crypto too much. And I'll tell you what, I've never lost more money, more time, and more energy than entrepreneurship. So if you're thinking about going to entrepreneurship, I want you to pay attention to this because this could save you a ton of time, which is more valuable than your money, but it's also going to save you a ton of money. So I'm going to tell you a quick little story. The first successful business that I had was a vending route. I sold gum and candy and stickers and fake tattoos to kids, and you put them around in barber shops and pizza parlors are really great. Any place where there's families and kids, basically. And even though I was sharing 50% of the revenue, so I'm taking all the costs, right? I'm taking all the costs for the gas, the machine, and the product, but I'm giving 50% of revenue to the location. There was still a massive churn rate. 30% of my locations would drop off basically every 1 to 2 months. So you're constantly finding new locations, and it takes up a ton of your time. And when you look at the return on investment, yes, I was making 25% a month, which sounds amazing, but when you look at the amount of time and energy that you're putting into it, you're better off just going and working for somebody else, selling cars, doing a side gig, having something else that's tied to performance, because that's what all entrepreneurship is. It's performance-based pay, okay, whether you know it or not. And this taught me a super valuable lesson. If you're going to be an entrepreneur and you're going to start a business, the number one thing you really have to think about is scalability. That's why when people talk about they want to open up a restaurant, they're such a good cook, I'm like, oh my gosh, that's horrible. Because unless you're going to scale that to 10, 20, or 100 restaurants, it's probably a huge waste of your time. If you're really good at running a restaurant, there's probably some other business that you could do that's going to make way more money. So when you go into entrepreneurship, I want you to think about scalability. Okay, how do you get to 100,000? Then how do you get to $1 million in revenue? Then how do you get to 10 million? And if you can't figure out and start building the system before you even start, before you invest the money, before you burn your wheels on your time and your energy and throw money at this, if you can't figure out a plan to have this massive exit to get you to a big goal, I personally wouldn't do it. I wouldn't do it. And let me tell you something. If you just want to, kick back and chill in Bali and not spend too much time working, you want to quit your job or change careers, or you really, you're making money as a programmer, but maybe you really want to be a photographer, but you need a little bit of side income to get that going. Before you go down entrepreneurship, trade stocks. Because when you trade stocks, you're going to do fundamental analysis if you're trading stocks correctly, okay? And you're going to start to see some of the patterns. You're going to see, okay, well, this is what this company is doing. This is what they're talking about on their earnings call. This is their plan for the future. And I just realized the other day that my research is present, past, then future. And it's in that order. When I look at the setup of the trade, when I'm going to make an options trade, there has to be enough premium there. That's the present. What is it right now? Is there a trade today? If there's no trade today, I don't look at the company. So I run a scanner, and that scanner says, hey, these 50 companies have a trade today. That doesn't mean they're good companies, but it says there's something here worth looking at. So that's the very first thing I do. The next thing I do is I go and I look at their debt ratio, and I look at their income, and I look at their revenue, and I look at their cash on hand. Okay? That's looking at the past. All financial statements are actually past indicators of what they did last quarter, the previous quarter, the previous quarter, the previous quarter. It's a little bit forward looking. They always have that warning and disclaimer, past performance is not an indicator. Yes, it is, okay? Let's be honest as traders. If you're losing $100 million a month and you've only got $50 million in cash, it's pretty obvious what's going to happen. You're going to have to go out of business, or you're going to have to raise capital, and you're going to do that either through more debt or you're going to dilute shares, right? It's definitely an indicator of future performance, okay? But it's not the whole story. Then the next thing I love to do is listen to their earnings calls, because in the earnings calls, They are going to talk about what they did in the past, and they're going to explain the numbers. Well, why didn't we hit these targets, or why did we spend this much money on this? But the best thing is they're going to start talking about the future. We're going to focus on this sector. We're seeing really good growth here. We spent money on these two things, and we're seeing a really good growth here, and so we're going to lower this and we're going to raise this. That's what you get when you listen to the earnings calls. And you can also read the transcription of the earnings call. You can take notes, underline things. That's the better way to do it. Or if you don't have the time and you just want to listen in the car, just listen in the car on your way to work, listen to the earnings call, okay? Fantastic way of doing it. Another nice thing about listening to the earnings call is you hear the CEO. Sometimes you hear the CEO, COO, CFO. You get to hear their confidence, their posture, their professionalism, all right? Understand that an earnings call it's a bit propaganda, right? They're telling their side of the story, and they're trying to make it as rosy as possible for all of their institutional investors and all the retail investors, right? It's not a super honest discussion. It's supposed to be honest, but you got to understand there's obviously some bias there. But you get to understand how much and especially the more you listen to these, you go, aha, this CEO is really good, and I really like what he's saying, and he's really doing something that's going to explode in growth, or it's going to be really long-term good, right? Like Elon Musk and Alex Mashinsky, and we'll get to him in a second, okay? And as you do all these things, as you research all these stocks, that's going to translate to your future entrepreneurship. You're going to be like, aha, I need to do this first, I need this. Now you got to be careful, right? When you're talking about publicly traded companies, these are companies that, in one sense, they've already made it, right? They've already had enough money and enough team and enough product that they've launched and gone on to do an IPO or a SPAC and entered the market. Now, some of you are laughing because of the EV market. Some of these guys have not released a single vehicle, and yet they've got billion-dollar valuations, which is ridiculous. Rivian, Lucid. But listen, most of these companies, you gotta backtrack it a bit, but you can then see you get what I'm saying? Like if you're an entrepreneur and you go out and you study stocks and companies, you're gonna get a vision of what a full good company looks like in the end. You're gonna get an idea of what a CFO and CEO should sound like and look like in the end. Now it's different than doing a startup, but I read a lot of books about lean startup and this startup and being an entrepreneur. And that was before I traded stocks. If I had traded stocks and read those books together, I had a much better picture before I started the entrepreneurship journey and lost a ton of money, a ton of time. Because I told you about my vending route, that was a huge waste of energy and time, but I actually made money on that. I have other ventures, other entrepreneurship things where I lost money, time, and energy and basically recouped nothing. Never with stocks and never with crypto have I lost the entire portfolio, right? You have a set budget. Now, yeah, I've had a crypto go to zero or it was a scam. I've had a stock go to zero. That happens. But you have an overall budget and an overall portfolio, never blown up the whole thing. Whereas in entrepreneurship, done it several times. You learn from it, but it happens, okay? Now, we're actually looking for the next CEO, the next manager to run Fox with Stocks, which we're going to rebrand into Unlock Freedom. If you know somebody that's fantastic, let me know. By the way, if you have any more questions, I'm going to try and keep this short, but if you have any questions, subscribe and comment below, and then I can make a future video answering your questions. I actually love questions because then I know that I'm actually giving you guys the information and feedback that you want to hear, and then it's a really helpful video, and I want to give you guys value. So subscribe and comment below. Ask me any questions about any of these topics that you want more information on. So the next thing we're going to talk about is crypto. Well, why is crypto so different than stocks? We talked about stocks versus entrepreneurship, and it comes back to public information, basically accounting. When you are doing stock trading, you have a publicly listed company that has to put out financial reports. It has to run those reports through the SEC and possibly other commissions or organizations through the government, and they are legally liable for that information. If you do research on companies, you will see all the time these lawyers who are trying to get enough people together who've lost money and form a class action lawsuit, even on a good company, because of some miscommunication in their accounting or their reporting or their sales or their calls, right? That's why a lot of this gets to be very boring. Whitewashing can be very boring to listen to an earnings call, but you know what? There's a legal ramification that they have to not misrepresent themselves. In crypto, you don't have that oversight, and that's what makes this big opportunities in cryptos because you don't have to be this massive company. You don't have to have this massive team. You can be two guys in a garage. You can be guys in Ukraine or Russia or Brazil or Venezuela starting a project and just getting people on board, and you can invest early and have something go from a penny a piece to $1 a piece, you know? But it's really hard to be conservative and do the research and find the right companies and the right projects and still have the right upside, okay? That's the trade-off. You got to understand, the lower you get in on price, the more, not only the more upside you're going to have, but even the more safety you're going to have, because it has more chance to double and for you to take your money out. It has more chance to go up even a little bit and make a big impact. If you wait for it to go up, right, then you can miss out on a huge amount of basically opportunity, but even safety. It's weird because in investing, safety and opportunity are tied together. And people don't understand that the math works that way. I love selling puts because I know up front what my premium is going to be and how much downside protection I'm going to have. Now, we're about 11 minutes in, so I'm going to start to wrap this up. I wish I had more information. I want to keep this tight. I want to give you guys more information, but please comment below with your questions and we'll go over more details about that. What else did I want to say? I want to get this wrapped up. I feel like I got so much information to give. If you're going to get in on crypto, you want to study it and figure out how do you get in early, but also how do you do the research. And I think it comes down to the team, the CEO, and the product. What are they doing? And I'm going to quickly wrap this up and probably make a separate video. I want you guys to check out Celsius. I've invested in them 2017, 2018, and I've had massive growth, but I still think it's a good opportunity to get in. I just talked about how you want to get in early when it's cheap. If you wait for it to go up, you get more certainty because you know, hey, they're actually delivering a product that's actually working. So their safety level goes up, but you don't get this massive upside. I think Celsius is the exception. I think there's still massive upside to this token. And if you look at Alex Mashinsky's interviews and what he talks when he's on panels and what he's trying to build and what he's done in the past, this isn't his first startup. This isn't his first billion-dollar company. They already have a billion-dollar valuation. Okay? They already have, I think, $1 billion worth of assets under management. Don't quote me on that one. That might be a little bit wrong. It might be several $100 million, okay? But this guy has already worked on voice over internet protocol. He already worked on TCP/IP and solved major tech problems early on in the internet, right? Early on, it's not that long ago. But this guy has already founded billion-dollar companies before and exited, and now this is his latest and greatest project. I really want you guys to check it out. There is, of course, a referral code below. You'll get $50 if you use my referral code and deposit $400. But you know what? I want to tell you, I really think, even if there wasn't a referral code, I'm telling my sister and my friends and my family about this company because I think there's still massive upside. And when I look at the crypto sphere, it's hard to find something where it has a proven track record, because a lot of them, if you're going to get in early, right, has a proven track record and the upside potential that you want. This is a gem just with those two things because they already have a product that is working, that is generating revenues. I won't say that they're profitable quarter on quarter, but they are generating massive amounts of revenues, massive amounts of customers are using them. Institutions are using them, okay? Go check it out. But also, the CEO is a baller, right? This guy has built multiple billion-dollar businesses. He's done, I think, 8 startups. It could have been even more than that, but he's had 2 billion-dollar valuations on his startups, okay? He's built unicorns before, and this is already or becoming very quickly a unicorn, okay? I want you guys to go check it out. It's 14 minutes. That is longer than I wanted to go on this video, but it's so hard to compress all this information and give it to you. Check out Celsius. Go at least listen to the CEO talk about his own company, okay? That's what really converted me. I've already made money on it, but I'm not selling. I'm not taking anything out. I'm going to put more money into this, and I want to get that across to you guys. And I wish you guys the best of luck, whether you choose entrepreneurship, stock trading, or crypto trading. I want you to be part of the community, and I want you to be successful. Good luck, guys. Bye from Bali.